Eric Mother.com with a follow-up after part 8 of this series, and this is a couple of hours after the previous video, which is part 8. And what I wanted to share with you briefly is this is now the day after the video was made, which is part 8 was made. I just want to show you what the markets are doing. We can see right now markets are called slightly higher, but it's interesting how this has played out. It's about 3 hours, 4 hours after the making of this video, or the prior video, part 8, and this is now part 9, and the market slightly up, but the way in which this has taken shape is interesting because we opened lower. Now remember, we talked about this 5-minute chart here. The market had closed exactly on the line, so my thinking was that this could easily be support, and which could suggest that the market would move higher, or it could break down and the market would gap down. So what is interestingly taking place is a couple of things. Number one, the market broke through that line this morning. So we gapped down this morning, but over the next couple of minutes or so, the market eventually moved back above the line, the blue line with uniform activity. So what I'm trying to say here is, whenever you see uniform activity, a break of a line, and the market recapture the line with uniform activities, for example, let's say you break a trend line and the market goes above the trend line and back below it, that tends to be a trap. It could be any type of uniform activity above or below a line. In this example, the line is a diagonal line like that, but you can see that this is clearly V-type formation, which means that this was a trap. And remember, the same line we are drawing here, sometime it's gonna be something like this, or even triple bottom. As long as it is uniform activity on the line and back above it, once it moves above the line or below the line with confirmation of uniform activity, or above the line in this particular example, once it does that, it's a buy signal. So in the morning, it looked like we were breaking down, looked like we were headed for a big down day. As you can see, the market recovered on its own accord, and once it moved back above the blue line, the break line, you knew that the market was back in play, which is somewhere here. Since then, it's been moving higher. Now, curiously enough, now we've had the market turn positive, confusing everybody, but we've come back to the line where it's been stalling on the price on a 5-minute candle. And what I'm talking about here is, if you are a day trader trying to get the scalp trades in the market, you see that this could be potential resistance. We also see that we've come back to the line we had drawn previously, connecting the previous highs. So connecting the highs here, 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 so those 3 lines, and then connecting yesterday's highs and the high for today. It also corresponds with a simple line which goes back to this break line here. Remember, we talked about that break line, and that break line corresponds with this trend break in the RSI. That break point gave us this drop point, and since then market's been coming back to that line, showing resistance and pulling back for day trading, scalping type of situation. And now we've come back here. So if you are going to be neutral and wanted to play this market right now, you'd be looking to go short. Keep in mind that this is short-term 5-minute chart, because now if we take a look at what could happen here, this could easily become a breakout area if the market takes this out. If it takes out that line with a move above that resistance line, then it becomes a buy. At the same time, if the market can move above these 2 lines, one connecting the tops and the other one connecting to the break point, so if it can move above those 2 lines, then the market is not a short, but it's actually a buy. Just want to show you what and how things were developing here. Short term, maybe a pullback, but we need to watch that in case the market breaks out to the upside. The reason why I say that is, as of right now, if you take a look at the S&P 500 daily, remember we started by looking in the previous video on the monthly. Monthlies are generally good. Today we see the S&P 500 gap down and hold the 50, and we also see that as of right now it is holding above this line of support. And so the more this is support, the more this line is confirmed on the bigger picture, bigger than the 5-minute chart, you're looking for the markets to move higher. So it's likely that the hourly charts could lead to a breakout above the lines I discussed on the 5-minute chart. Also, just another view is the Dow. On the Dow, we see that a line that was previously being broken earlier this morning. Keep in mind that earlier this morning the Dow was down 110 points. It's recovered and now it's up 40 points. And to me, it is holding the line that we've been watching for a couple of days. And also it has a chance of moving above 50 on the daily time frame. If it can hold above 50 on the daily time frame, then we have a big day. It's also holding above the 50-day moving average, which is great. It's also holding above this line here. So lots of things taking place as far as the Dow is concerned, and if it can hold, one can expect higher prices over time. Now also take a look at the Dow Transports, which a lot of people are calling for the Dow Transports to be signaling the end of the bull market, and I did caution all of us to be a little bit weary of trying to predict where the market is going to make a high, because this line here could be support, and we talked about this before this week's support. It looks like that idea that the market could hold support here makes sense. The more this is confirmed as support on the RSI for the Dow Transports, the more my thinking is that we are headed higher. So we need to watch that for confirmation that the market is starting to repair the break, or at least the bend and the cracking in as far as the transports are concerned. And also we take a look at the daily, and the daily we see that the line that we drew over the weekend continues to hold, and this looks like a nice double bottom based on the support on those double bottom lows here recently. So as long as those lows are holding, the Dow Transports, even though they did look broken, I do admit that, it looks like they're finding support. So go back and let's finish this video, wrap it up by taking a look again at the 5-minute chart for the SPX. That yes, short term we are looking at the possibility of this becoming resistance, as you can see here, but yet because of the strength and the other bigger picture things taking place on the daily charts, for example, and the weekly charts for the Dow Transports, if it can take out that line of resistance on the price, then it surges higher. And if it can take out the resistance on the 5-minute RSI lines, then it moves higher. So those are the levels to watch. My thinking is based on how the daily charts are constructing themselves. This market is confusing everybody, but eventually it's gonna blast to the upside. Why? Because there's a possibility that the Dow could also move its daily RSI back above 50, and if the Dow moves its daily RSI above 50, expect a strong day into the close. Eric Mwade, good luck, peace, and blessings. Woo! Yeah. E-A-C-S.